Hi everyone, welcome to our webinar today. Sorry, I was talking to myself for a minute. I didn't even realize that I was on mute. So, hi Abiche, hi Ellen, hi Jacob, hi Lily, hi Martha, hi Olin, hi Ronelsa, Tony, Joash, Muhammad, Jessica, and I see more people joining. So let's just give them a minute or two to join. Morning, morning, morning. Okay, the fact that you guys are saying morning and saying hi, I'm assuming I am loud and clear. You guys can hear me loud and clear. Is the audio working well? Okay, that's great. Thanks, Abitra. Thanks, Jacob. Okay, so I'm not going to be turning on my camera today because I had a notification earlier on saying that my internet connection is low. I don't know what's happening, so I'm just gonna leave it off so that we can, I don't know if turning on the camera actually consumes like the connection. It actually affects the connection, but I'm just gonna leave it off so that we don't risk having slow connection and whatnot. But that doesn't matter. I think more importantly is you guys are able to see the screen and you guys are able to hear me, right? Okay, I do still see more people joining, so let's just give them a minute or two. No, we want to see you guys. Not today, Abiche. I really want to, but I did have a notification saying that it was slow connection. I really don't know what that means. Like with the camera. I I think I'll just leave it off. Hi Ellen, welcome. Okay, I think that's everyone. Okay, okay, I do still see people joining. Hey Kaylee, welcome back. Okay, so let's start with the disclaimer as usual. You know, we have to start with these disclaimers to remind you guys that anything I share here today is mostly, oh, hey Edith, welcome, mostly my opinion and not of those of Vantage FX. So when I share whatever it is today, just take it that this is whatever I do to become a profitable trader. I hope whatever I teach you guys will be able to work, help you guys in your own trading, and you guys will be able to implement into your own trading strategy. Okay. Again, as usual, I want to remind you guys trading on FX and CFDs, trading FX and CFDs, especially on margin, carries significant risk and is not suitable for all investors. Okay, so you guys just be careful when you're doing trades. Please use proper risk management. Please just be careful, okay? Don't overdo it. Don't overtrade. Don't sell your house. Don't sell your kids. Just do whatever is necessary to be safe with your account and don't risk bursting your account after one trade or two trades. Okay, so let's start. Today we're going to be doing trading strategy clinic. Trading strategy clinic is basically looking for setups and showing you guys how I find my setups using my strategy. My strategy is the same every week, but the thing is, when we're doing this together, we might be able to find different setups and we might be able to come up with better trades together and more probable trades together. So usually before we start the live session, I will ask you guys if you guys have any requests or if you guys have any pairs you want me to look at. If you want me to look at like AUD, CAD, AUD, USD or Euro, USD, whatever it is, just let me know in the chat box and I will be looking at those pairs after. So I've already got requests coming in now. Gold, oil, gold, AUD, JPY. Okay, so those are trades that are coming in. So the only Forex pair is actually AUD-JPY by Jacob. The rest is by Joash, Jessica, Ellen. Yes, we can look at gold and oil after. Okay, that's that. Our agenda today will start with, sorry, that's the wrong slide. Okay, our agenda today will be starting with an introduction about who we are, and then we'll move on to the live charts. Okay, got a request from Kaylee for GBP JPY. Okay, so for those who already know us, because I do see a lot of familiar names. I mean, I see Ellen, sorry, no, Kaylee, Edith, Jacob, Tony, Abiche. So you guys probably already know who we are. But the rest of you, Jacob, for the rest of you who don't know who we are from Everest Fortune Group. We are an award-winning research team. We do a lot of technical analysis. Oh, hey, Yubaraj, welcome to our webinar. Welcome back. Okay, Lily has a request for EUR CAT. We'll look at those pairs later. We are a Singapore-based certified fintech company. Okay, so in terms of technical analysis, we can say we know what we're doing. We've won, or we are the finalists for Technical Analyst 2019, 2022, and 2021 for the best Forex and best equity research. Okay, so when it comes to TA, we're pretty good at what we do. And we don't worry, whatever you learn here, it won't be information that is like misleading or like things that we haven't already back tested. Everything we teach is strategies that are already back tested and we also use. Okay, so our team consists of our CEO Desmond. He basically taught us everything we knew about trading. You guys have probably not seen him because he doesn't take you guys for Vantage webinars. My colleague Angelina, and then for those who are familiar with Kaylee, sorry, Kaylee left already. The slides are not updated. Okay, and then there's me, Kayleen. Sorry, not Kaylee. Kayleen. I get confused. Okay, there's me. My name is Cass. I'm an investment analyst here at Everest Fortune Group. I'm a profitable trader. I'm actually managing more than, it's actually close to 1 million now. So I'm managing more than $1 million US dollars, and that's on my own personal account. Okay, so I've passed FTMO twice. Hey, Yubaraj, welcome back. I passed FTMO twice, and for those who don't know what FTMO is, it's basically a prop trading test, which requires you to come up with profitable trades up to 10% a month. So you know how there's 1 month and there's only 22 trading days because you only trade from Monday to Fridays, and on the weekends it's closed. They don't let you take trades on the weekends. So in that 22 days, I managed to make 10% on average for both my FTMO accounts, and then subsequently I did another prop trading, which is my Forex fund, and I also managed to pass those twice. That one requires you to only do 8% and manage to pass those. So I think on a consistent basis, I can fairly say that I do rack in about 10% profit a month safely, like at least conservatively. And I do that by using Fibonacci confluences. I do that by catching reversals. I love to catch reversals. Reversals are the best. It's catching like the trade at the peak and then catching the entire move down. Okay, so we're gonna move on to the live chart so that we can try to catch those reversals today. Yeah, but before I move on, I just want to find out if you guys have any questions at all. Any questions you want to ask, you can ask now before we move on to live chat. I know it says Q&A 20 minutes, but we're not going to take 20 minutes for Q&A because we want to spend more time on the charts and less on just conversing and stuff. So if you guys have any questions, do drop it in the chat box right now so that I can try my best to answer you before we move on to the live charts. I'm gonna leave this here for a minute or two so that you guys can type in your question. Okay, I've got someone saying, I've been losing a lot. What do I do? Do I continue trading? Okay, this has something to do with trading psychology. I won't be doing a webinar on trading psychology until I think probably end of the month or next month, because we're currently doing our Fibonacci series right now. I know the regulars are attending the Fibonacci series. This is every Tuesday, the same time every Tuesday. So we're now doing Fibonacci extension. Next week we'll be doing Fibonacci projection, then expansion, and then Fibonacci projection. And after the Fibonacci series, we will do a series on trading psychology. Not a series, but maybe just one webinar. So it depends on you guys if you guys want more of the trading psychology. So basically, if you're losing a lot with your trades, what I can suggest that you do is take a break. Like just stop, take a break and like lay back for a bit, and then kind of like go back and kind of review your trades first. You want to know where you went wrong, or well, there's no right or wrong. It's just I don't ever think there's a right or wrong for anything. I just think that in life there's just a better way to do things or not. So what I can suggest that you do is take a break, recuperate emotionally, mentally, because I know losing over and over does affect you like psychologically. You just want to take a break first, and then you want to go back and review your strategy. You want to review those traits that you took and see where you could have done better. Like was my entry better at this support or resistance? Is this strategy I'm using okay? Is this indicator I'm using actually even working? Okay, so you want to review to make sure that the strategy you're using is even working. Okay, because imagine you have everything in place. You have your mind in place, you have your risk management in place, but your strategy you're using is not in place. So when we cover trading psychology in a few weeks from now, I will be talking about first to prioritize your mindset. So your mind is the most important thing as a trader, and then followed by being able to use proper risk management. I know it sounds so simple, but you'll be surprised how many adults are unable to just follow these simple rules. It's crazy. Like if you see a child smoking, for example, as an adult, you'll go straight to the child and say, "Hey, you're not supposed to be smoking or drinking or doing drugs or whatever it is." But as an adult, when you're doing something you shouldn't be doing, for some reason you're not able to say no to yourself. So that's a lot to do with like psychology, and trading has a lot to do with like psychology as well. So that's that. And then we will look into being able to use proper risk management, which requires a lot of discipline. Actually, it requires a lot of discipline to be able to not over leverage. Over leveraging is like probably the major problem people have with like trading. And lastly is actually the strategy. So the priority is the mind, risk management, and then the last thing that you should be focusing on is actually a strategy. So right now, just take a break, like align yourself mentally, go and review how you can take better risk to reward trades, and then lastly, do the back test and see how your strategy could have been better. Okay, so that's that. We're gonna move on to the live charts. I do not see any more questions coming in, so I guess you guys are eager to move on to the live charts. Okay, so I just want to find out if you guys can see my charts. Everyone good with the charts? Is it clear for everyone? Do I need to zoom in? Do I need to zoom out? Do I need to change something? Do let me know. Okay, thank you, Jacob. Thank you, Olan. Okay, let's go through some of those requests right now. Actually, before we go through those requests, I did see something on oil. I did see a possible entry for a buy on oil. So let's look at that first. Okay, so that it might end up being a missed opportunity. Oil. I don't know about you guys, but the charts that I always look at is thank you, Abiche. UK oil. This is a chart that I use. UK Brent oil. Okay. Yikes, this is not the chart I was looking at. Okay, this is the charts I was looking at. So I do see a buy. Why do I see a buy? Is because, let's just quickly do this because I do see price already moving right now. Okay, let's do support and resistance as usual. We want to find our trend. Clearly, it's on an uptrend with whatever's going on with Russia and Ukraine. It's clearly an uptrend. So let's look for support and resistance. I'm going to change this so it's clearer for you guys, that you guys won't get confused. Okay, so that's support and resistance. So one, why I think this is a buy is because, Josh, when you were asking about what you should do now, when you're reviewing your trading strategy, you need to review. You need to go back and look at the trades you took and then ask yourself, why did I even take that trade in the first place? So trading is just a very factual, calculated game. Okay, it's a very, everything you do in trading is just factual. It's calculated, and there's nothing else. Like if you are going to take a trade, you have to give your reasoning why you're taking a trade. If you are able to give your reasoning, even if you lose, even if it takes hits your stop loss, it doesn't matter because you are using a proper system and a proper strategy backed by evidence. Okay, so that's more important. Okay, so one is on an uptrend. If you guys want to help me out, you can just drop it in the chat box. A lot of my webinars, if you have supporting evidence why you think it's a buy or why you think it's a sell, you can just drop it in the chat box, because this way, as a team, we can find better, more probable trades. Okay, so I think it's on an uptrend. Number two, it's at the support of the Ichimoku cloud. Okay, so the support of the Ichimoku cloud. Number three is on a horizontal support, horizontal pullback support. Okay, so this is price action. Horizontal support and resistance is price action. Okay, so that's three things. Number four, if you grab your Fibonacci tool, right? The 61, yeah, the 61.8 Fibonacci retracement will line up nicely at your first support. Okay, 61.8% fib retracement. Okay, so that's already four supporting arguments why it's a buy. Okay, so I do think it's a buy. I think price was just doing a retracement, and then now it's reached the support, and now it wants to go back for that buy. Go back with that bullish continuation. Okay, when I saw it earlier on, it was here. That would have been the best entry. Right now it looks like it's up, it's going up already. So this is one probable trade. If I were to take this trade, my stop loss would just be slightly below this wick. Okay, slightly below this wick. So if price were to even reach your stop loss, it would need to break the cloud, break the support, break the 61.8 Fibonacci retracement before it can reach your stop loss. Okay, but other than that, I think this should be a probable, highly probable trade. Okay, why I keep saying highly probable, it's because when you're trading, you just need to find trades that are probable, like high probable. Okay, I don't know if you guys play poker or whatever it is, or like if you guys play card games or whatever it is, it's basically all just probability. Okay, you only want to take trades that are high probability. Even if you lose, then it doesn't matter, because at least you yourself took the trades that are most probable, the most probable, and if it's the most probable, that's enough. Okay, so technical analysis is saying that it's a buy. Fundamentals should also be saying that it's a buy, because like I don't know how the situation is now, but last I checked, nobody wants to buy oil from Russia now because of what's happening. So that will decrease the supply of fuel oil in the market and increase prices, because now there's scarcity, right? Because now there will be an over demand of it. Okay, so where I would play this to, I'll play this to the first resistance. I'll play it to the first resistance. That was the swing high. That was the last swing high. Why am I playing it until the last swing high? Is because price tends to be attracted to key levels, okay? Price tends to keep going back to key levels. That's why I'm playing it to the high, and along the way, I do not see any other key level, okay? Unless you consider this a key level, but that's not really a key level. It's just a tiny little like reaction. It was just a tiny little reaction. It wasn't significant enough. The last significant reaction that I saw was this swing high. Okay, so if this was the last reaction I saw, then this would be the last key level, and I'm biased that price will be attracted to this key level and will be heading to that key level, and that would actually line up nicely, probably with the 61, the 100. Oh, sorry. It will line up nicely with the 78.6 projection, okay, Fibonacci projection. So I think this should be okay. This should be okay. This should be a good take profit area. Okay, so that's that for oil. I hope that answers the request for oil. Let's look at other pairs. I've got Jacob asking for AUD JPY, Kaylee asking for GBP JPY, and Lily asking for EuroCAD. EuroCAD, okay, no, EuroCAD was not the one that I saw with the really good setup. Okay, and we're not gonna go to any of this pair first because I want to highlight something to you guys in case it happens and we miss this like potential amazing trade. Okay, so if you guys read trading psychology books or trading books in general, there's this book called Reminiscence of a Stock Operator. Okay, so it's basically a book revolving around the life of a trader called Jesse Livermore. Jesse Livermore was one of the best traders in history. At his peak, he managed to make a profit of $100 million, and this was in 1930s. Okay, 1930s. Yes, you heard me, 1930. Okay, so even in today's time, which is a century later, today is like 2022. What is the book called? It's called, let me just type that out. Reminiscences. I'm sorry, I'm bad at this. Of a Stock Operator. Okay, so this book, Reminiscences of a Stock Operator, is a 1923 Roman A. Clef by American author Edwin, I don't know how to pronounce this. Okay, so it's a really good book. I started reading after you mentioned it the other day. What a great book. It is a great book. It's a great book. Yeah, I'm glad you have been reading it. Kaylee and Joash has started reading it as well. So it's a very good book. So it revolves around this trader called Jesse Livermore. Jesse Livermore at its peak made 100 million, and this was in 1930s. Even in today's time at 2022, 100 million is still a lot of money. So imagine he was able to make that kind of money back then. So basically the whole book was, not the whole book, but a lot of the book was mentioning how trading is just a repetition of history. So when you pull back in your charts and you look back and you see the patterns, it's actually just patterns repeating itself over and over and over again. So that's what he's saying. So basically what he's saying is that you should look back, you should go and back test and see what price did for AUD-CAD, for example, price did for AUD-CAD, and then what, with this current information and data that you have collected, you are now going to forecast or predict what you think price is going to do in the future. But it's basically, because he says it's basically just a repetition of history. So after collecting all the data from backtesting, you would be able to forecast what price will do in the future. So that's why backtesting is so important. Okay, you cannot just backtest AUD-CAD and use the same strategy on Euro USD, for example. Okay, backtesting on AUD-CAD means that that information is only good for AUD-CAD. How far should you go back? I'll just go back maybe until I see the pattern breaks. Okay, so I'm gonna show you guys what pattern that I caught with AUD CAD. It's a very simple pattern, but it seems to be working very well. Okay, you guys know how I love my Ichimoku so much. Almost all my webinar I use Ichimoku. So Ichimoku is, you can go to the indicators, type Ichimoku, and the indicator will come out. So Ichimoku works where it's a very simple trend indicator where when price breaks the cloud, it's signaling that there will be a trend reversal. Okay, so it broke the cloud here. You can see that price just shot up beautifully. You would imagine you caught this breakout here, and you would have been able to catch this beautiful trade. You would still be in this trade right now. Actually, you would still be in this trade. Okay, that's one way. See, so it broke to the downside. It just puked. Okay, it broke to the upside. It just went up. If we pull back, it's just doing the same thing over and over and over again. Okay, every time it breaks the cloud, it goes directly in that direction. It does not turn back until it breaks the cloud again. Okay, so I can keep pulling back and you'll keep seeing it happening. Okay, so this is the pattern that I see is working for AUD CAD. Okay, but if I go to a different pair, this same strategy may not work. Okay, so different pairs have different strategy that works and different time frame as well. So if I go to the 1 hour, it's probably not as beautiful as on the 4 hours, or if I go on the daily, or if I go on the weekly. Actually, even on the daily, yep, on the daily it doesn't work that well. See, it broke here and it just ranged and then it broke back down. So that it's just showing that it doesn't work that well on the daily. It broke here, did a fake out, and then went back up. So on the 4 hours, the Ichimoku, hey Amina, welcome to our webinar. The Ichimoku works really well. So when I pull back, I keep pulling back. I saw it happening 9 times in a row. Okay, so based on Jesse Livermore's theory that price is just a repetition of itself, history is just repeating itself. If it was able to do this 9 times in a row, there shouldn't be an exception. There shouldn't be a reason why we question why it wouldn't happen on the 10th time. Okay, so it happened 1, 2, 3, 4, 5, 6, 7, 8, 9 times. Here it didn't really happen. Here markets went sideways, market went sideways, market went sideways. So before this 9 times, it wasn't working very well, but for the last 9 times, it's working fairly well. So hopefully on the 10th time, which is when price breaks this cloud again, we would be able to catch a beautiful trade. Okay, so this is just a probability. This is how you find probable trades that are backed up by reasoning and backed up by information that you have collected. So based on the information of the 9 times it broke the cloud, we are expecting it to do the same thing on the 10th time. Okay, so it's just very factual and very calculated and very it's just probability and statistics. Okay, so I know some of you, like if you are an emotional trader, some emotional trader will look at this and be like, oh, if it already happened 9 times, it's probably not going to happen the 10th time. Like that's too many times. Okay, that's just being very emotional. You're letting emotions decide what you think is going to happen. But if you just based on facts and just based on like a calculation or collective data that you have collected based on research and data, based on back testing, if it happens the 9th time, why shouldn't it happen on the 10th time, right? So if you're being very factual and using this, having no emotions to make your decisions, then on the 10th time, we're hoping this breaks and it shoots down. Okay, so let's hope that plays out. It's probably going to play out within the next few days, probably not this week because tomorrow is already Friday. If it was gonna play out, price should be already trying to break the cloud. Okay, so hopefully next week when I take you guys again, by the time we see AUD CAD, it's probably trying to break and hopefully we can enter for a sell. So to get double confirmation and triple confirmation for this trade, we first want to wait for price to break the cloud. Number 2, there is a ascending trend line here. There's an ascending trend line. Okay, we want price to break the cloud, break the ascending trend line, and break the horizontal. Sorry, let me just grab the correct tool. Horizontal support here. So once it breaks this area, this is a very significant key area. Okay, let me just highlight this area. Once it manages to break all of this, we're expecting it to puke all the way from here. Okay, just based on backtesting and what past history of AUD CAD was saying. Okay, so that's one probable setup. You guys might want to highlight this or put this on your favorites or whatever it is, AUD CAD. Another thing is, what I would love so much about this trade is that this will be one of those 1 to 10 risk to reward trade. Okay, this will be a very beautiful trade. Okay, I mean, if you look at this, if you just caught this trade here right now, you got in here, this is your entry, and you would still be playing it up. You would still, I mean, there would be traders who are still in this trade right now. Look at that. You would have just caught the trade at the entry. Even if your stop loss is right here, like if your stop loss is right here and you're still in this trade, that looks like probably a 1 to 5 kind of trade, or maybe 1 to 4 maybe. Okay, let's try to see if it's at least a 1 to 4. Oh no, it's only a 1 to 2. Okay, but usually I wouldn't put my stop loss so far away. I'll probably just put my stop loss where the cloud is. Okay, so if I put a stop loss where the cloud is, a really good stop loss placement. Let me grab that tool again, the long position tool. Okay, if I just put it here nicely with very good risk to reward, it's now at a 1 to 4 risk to reward. Okay, 1 to 4 means if you have a 100,000 account, you're only risking 1%, so you're only risking $1,000 per trade. If you lose this trade, you lose $1,000. If you win this trade, or if you took profit here conservatively at this high, or okay, at least at here, you will be making 4,000. So you're risking very little to make a lot. Okay, so these are those beautiful trades that I live for. These are the trades where you risk like $1,000 and then you see, oh, I've made 10,000 just from one single trade. Okay, so that's that. We can now look into other pairs. I have a question for those who are requesting for the Forex pair. I just want to find out from Kaylee, Lily, and Jacob. I know you guys are requesting some Forex pair. I just want to find out if you are requesting because you are already in the trade or because you're just looking for a setup. You just want to see what the bias is and what the analysis is on these pairs. Can you guys just let me know? Like, do you want me to analyze these pairs because you are already in it? Okay, Jacob looking for a setup, Lily and Kaylee. Are you guys looking for a setup or are you already inside the trade? Okay, just looking for a setup. Okay, great. I asked this, looking for a setup as it feels like EuroCAD could be a buy. Okay, I'm glad, Lily, I'm glad that you already have a bias. So let's just see if we can back up your bias. I just want to find out a little bit more. This bias that you have, is it on the 4 hours time frame? Like which time frame is it, so that we can go and look at it together as well? Okay, it doesn't matter, there's no right or wrong. It's just basically, again, I say trading is a very factual thing. There shouldn't be any bad feelings. Everything's just factual. Okay, so it's daily. Could you also look at NAS 100? Yeah, we can look at NAS 100 after we look at the three pairs. Okay, Jacob and Kaylee, I like that you are just looking for setups because that means that you have no emotional attachment to these pairs that you're talking about. Like for Jacob, you requested for AUD JPY and Kaylee requested for GBP JPY. So if you're only looking for a setup, it just means that you have no attachment. I mean, even for Lily, oh, Abhishek's already made $40. Good job. Okay. So even for Lily, because you guys are not in the trade, that means you won't have emotional attachment and you won't be biased because you're not in the trade and you're just looking for something, which is good. That's how I like to do it when I'm looking for trades. I like to clear all the indicators. I like to clear all the drawings indicators so that it removes all biasness. Okay, it removes all biasness. I'll give you an example of a trader being biased. So I actually have a lot of cryptocurrency. I have a lot of Ethereum. I bought quite a bit of Ethereum. And every time I'm charting on Ethereum, I don't know if it's subconsciously or consciously, but I tend to chart the Ethereum so that it is going up. So I tend to look for setups. I tend to chart it, and the setup is that it is a bullish bounce, or that it's going up. Okay, so one day I had a colleague. He's also a very good chartist. She looked at my chart and she was saying, I don't understand why you think Ethereum was going up. Like, I don't know why your arrow is pointing up. Then she was saying there's clearly a descending channel. There's clearly stochastics is saying that's going down. Like RSI is saying going down. I don't know why you keep looking. I don't know why your arrow is pointing up. So then I realized why my arrow is pointing up is because I'm emotionally biased towards Ethereum being bullish. I want it to be bullish because in real life I am holding a lot of Ethereum. So it shouldn't be the case. Everything should just be factual. Everything should just be factual regardless of whether you are in the trade or not, whether you have a lot of Aussie dollars, okay? We're doing Aussie JPY, whether you have a lot of Aussie dollars and you want Aussie to go up, whatever it is, it should be factual, okay? So yeah, needless to say, I was wrong on Ethereum. Ethereum actually dropped that week, but I mean, it's up now. It's up now, so that's good. Okay, AUDJPY, let's look at the daily to look at the overall trend. I don't see a very clear trend. I do see one, that it is moving sideways, like just a very short sideways move. Two, there is a possible slight uptrend, just a very slight uptrend here, but then again, trend lines are supposed to have 3 touches. This one doesn't have 3 touches. At least I can safely say that on an overall, it looks like it's moving on an uptrend. Okay, it looks like it's moving on an uptrend. Okay, so that's one, to identify the momentum or the direction of trade. Because first, being to identify where the chart is going, I feel is already winning half the battle. Imagine when you look at the charts, it's actually bullish, but you keep seeing that it's bearish for some reason. So you keep entering for a sell, but price just keeps going up and up. And that's because you already got the direction wrong to begin with. Okay, so just give me a sec. I'm going to start charting on this. I'm just going to read some of your questions or comments. Which tools are appropriate? Which tools are appropriate for day 1 and H4 for forex trades? Okay, Balbeer, like I was saying, different pairs and different time frame has different tools or indicators or strategies that you use. There is no one strategy or tools or indicator that work for everything. There's no one fix all kind of thing. Every pair and every time frame has something different. I know some of you are thinking, oh my gosh, that's so much work. I just have to say, trading can be quite a bit of work. I mean, work as in you have to spend a lot of time researching, right? There's a lot of time spent researching and back testing and looking what works for what, but it's also very rewardable. Like, do you know, like the amount of money people are making from trading is a lot. I mean, if I'd rather be here back testing and looking at charts than be doing a 9 to 5 stuck in traffic or whatever. I'm just in front of a computer looking at charts and finding patterns. I think that's so much easier than having to wake up, answer to like things. I mean, it's just a very profitable game if you know how to master it. So the book you mentioned, he also said that you'll find when people are personally invested, they will always see bullish. That's true, Kaylee. That's exactly true. If you are personally invested in a certain trade, you, no matter, even if you see a descending channel, even if everything is telling you that it's gonna drop, you're just like, no, it's gonna go up. It's fine, because you're letting your emotions affect you. Please tell me Fibonacci FX signal. I understand not how to work this system. Okay. Let's try to look for a setup first. I don't have any forex signals. We're always just here looking for setups together. I like to emphasize that we're here together because there are a lot of times. Actually, I'll just give you an example. Yesterday, I did a trade. I did a webinar, and someone pointed out in the chat box, hey, isn't that an inverted teacup? Okay, so because I'm someone who don't use inverted teacups to trade, it wasn't very obvious to me. But someone in the chat box actually like, I see an inverted teacup. I don't know if it's valid or not. And I saw it, and we actually typed inverted teacup together. Like, because I'm not very familiar with something I don't use. I know of it, I just don't practice it. So inverted teacup. So inverted teacup is a signal for a continuation for the bearish. Okay, so if you guys see anything, do let me know. Okay, one, we are biased that it is bullish. Okay, we are biased that is bullish. Let's look for this. Oh, I see an overlap support. I love overlap supports because it means that price came here, rejected, price came here, rejected, came here, rejected, now it's here, rejected again. Okay, why I love it? Because it means that every time price comes to this level, it seems to be respecting it. It is respecting the level. It is not breaking the level, except for this one time. Except for the one time it broke. But other than that, 1, 2, 3, 4, and when I pull it back some more. 1, 2, 3, 4, 5 times it respected the level. So I expect it to respect the level again when it comes back in. Okay, but right now price is not close to that level. Price is close to the resistance. Is it gonna break this resistance? I don't know. We need to find out by using other things to back up our bias. So the one thing we can use is using a projection tool. Let's just project where we think price is gonna go. 61.8 doesn't line up there. There's a 61.8 lines up here. Okay, so this is a zone, a resistance zone. Let me see if anything else lines up there. There's probably a 122 Fibonacci extension. For those who don't understand what I'm saying, I'm sorry I cannot go slow today because today our priority is supposed to be looking for setups. For if this is too confusing for you and you need help with the basics, do join our Tuesday webinars. Tuesday's webinars is where we cover the basic stuff. Okay, so this is probably for the people, who's already attended the Tuesday webinars, who are attending the Tuesday webinars often, and they already know what I'm talking about. Okay, so I would say this is actually a resistant area. This is a resistant area, especially this part. This is a resistant area. So when there is a resistant area and you have so many Fibonacci levels lining up there, it just means that when price gets here, it will have a hard time breaking because there's so many things, there's so much resistance going on. Okay, do you do webinars every day? Like I was saying in the beginning of our webinar, we are just a third-party research house. Third-party house, we do webinars every day, but it's not for Vantage Markets. For Vantage, we do it 3 times a week. So Monday, Tuesday, and Thursday. We do it Monday, Tuesday, and Thursday. Monday, we cover market analysis. So that's fundamental analysis. Monday, we cover fundamentals. On Tuesday, we do topicals. So we cover the basic things like indicators, trading psychology, support resistance, all the basic things you need to know in trading. And on Thursday, which is today, we do live charts. Okay, we do live analysis, which is what we're doing right now. Okay, so I think this is a resistant area. Let's see what the indicators are saying. Settings for stochastics, you guys would already know it is 21, 5, and 3. Okay, that's also why there's so many regulars, because this is a journey, and if you guys follow the journey, you guys should be improving as we go. Okay, if you guys just join halfway, you guys will be lost. Okay, price is in the middle, it's not saying much. For stochastics, let's see if it's saying much for Ichimoku, not saying much either. Price is above the Ichimoku cloud, which is a good sign. It's showing bullishness. Okay, I would much prefer when price just broke. Okay, I love using Ichimoku when price just broke the cloud. Right now, it's in the middle of nowhere. This is not useful to us. Ichimoku is not useful to us. Let's see what RSI is saying. Okay, so why I'm looking for things to indicators and whatnot is because my burning question right now is, when price reaches this resistance, is it gonna do a reversal or is it gonna break out? Okay, because if you are able to answer this question, you will be able to make some money. Okay, when it reach here, if you can answer it accurately, it's gonna do a reversal, means you're gonna enter here for sell. If you are able to answer that, oh, it's gonna do a breakout, means you can enter here for a buy. Okay, so your ability to answer this question is your ability to make money in trading. Okay, if I'm being very honest, I think it's gonna break out. Okay, why I think it's gonna break out? Because even though there are 3 Fibonacci levels lining up here, I must say that they are quite far away from each other. I would much prefer it if they were all in one area. Okay, they were all in one area, but not really. It's kind of like quite a big area. Okay, so if it's a big area, it means that it can just break the 127 and then come back, and then after a break, and then find strength to break the 61.8, and then find strength to break the 100%. I prefer if everything lines up neatly and nicely, and on top of that, price already came to the 127, reverse back. So there is a strategy called the Nike tick strategy, where the Nike tick strategy. So basically, people play it to the 127, they enter here for sell, they wait for the bounce here at the last support, and they enter for a buy. Okay, that's usually how people play this strategy. Just from that alone, I do think price is going to break. I don't think it's going to have a hard time breaking. On top of that, there are no other things supporting my argument. RSI is not saying much. RSI is in the middle of nowhere. Stochastics is in the middle of nowhere. The only thing that's supporting is Ichimoku, but Ichimoku isn't saying much either. So there's not enough proof or evidence of this trade. I personally would not take this trade. On a normal day, I would be biased that this is a sell, because if it's reaching a resistance, I want it to drop down. But then that would be too easy, right? Then that's just price moving like this. Trust me, trading is not that easy. It's easy, but not that easy. Okay, I do think it's gonna break out, but I cannot confirm it with evidence. Even if I said it was gonna drop from here, I cannot confirm it with indicators, and therefore we shouldn't be taking this trade because there's not enough things backing up our bias. Okay, it is not backing up our bias. There's not enough things telling us one thing that it's a buy or sell, so we shouldn't get into this. We should just stay out to be safe. Stay out to be safe. So let's just look at another pair. Let's look at another pair and move on. Don't force a trade, okay? Do not ever force a trade. Look at this. Look at this side. This is all the pairs that I look at every single day. If you go to one chart and you cannot find a setup, move on. There's so many 100 things. There's 100 more things for you to trade. There's Forex, there's cryptocurrency, there's stocks. There's so many things to trade. You don't need to force a trade. Okay, so I would say AUD, JPY, no entry. Stay out. Okay, Kaylee's request on GBP, JPY. I'm just gonna quickly look if there's an entry because we only have 10 more minutes. You guys know how this works. On the hour, the webinar automatically turns off and I won't even get to talk to you guys anymore, even if I wanted to. Do I see a channel? Possible channel? Let's see. It is a possible channel. It's a really big one. It's a really huge channel. Prefer if it was smaller so that I can narrow down where I think price is going. Not the best channel either. It's not really touching a lot of things. Okay, I guess we can safely say that price is moving within this area. Okay, so price is moving within this area. Let's see if we can find an entry. Sorry. I do see a slight, just a very slight uptrend. Okay, like higher highs, higher lows, Okay, but then again, it's not the best. It kind of did like an M kind of thing. Doesn't look very pretty, doesn't look very probable to me, honestly. We are gonna skip this one as well. Let's just skip this one. I don't want to be giving you guys setups that are not gonna be profitable. Okay, so let me see. Yeah, it's not saying much, to be honest. Let's just skip this one. Nope, move on. Okay, EUR pet. Lily was saying there's a possible buy. We're saying that was a possible buy with on the daily charts, on hourly. Okay, on the hourly. Okay, on the daily, I do see a very obvious downtrend, but it doesn't matter. That's a very big time frame. On the 4 hours, not so obvious downtrend, but it is moving somewhere. I do see the buy on the 4 hours, to be honest. I do see the buy on the 4 hours. Okay, why I see a buy is this is just a very vague observation. We need to still back it up with other things. Okay, why? Because price just broke the overlap resistance here. So when price breaks, it means that this resistance is now a support, and we're expecting price to come back to this and then shoot up. I mean, that's just theoretically, that's what usually happens when there's a breakout. I do see a small breakout here, so that's already one sign of a possible buy. But then again, we need to keep in mind that the overall trend is bearish. Okay, the overall trend is bearish. On the 1 hour, that's definitely a resistance area. This is definitely a resistance area. Okay, so 1, 2, 3, and 4. Price came to test this area 4 times, and it has recently just broke the area again. Okay, so that's one possibility. Okay, let's see on the bigger. I'm sorry, I know it looks very tiny, but I need to look at the whole picture. Okay, let's see if there are anything lining up. Okay. Price broke the 38.2. It went to the 50% and then came back down. The next question is, will price head back to the 50% or does it want to shoot back down from here? Okay, let's see. Let's try to look for some signs or something. Okay. I do have a bias right now. It's a weak bias, though. I'm not very confident. I don't really love it that much. I do think price will come and retest and then continue. Okay, that's one thing. We need to back it up with other things. Let's see what Ichimoku is saying. Yep, Ichimoku is on the bull run. Like it just broke the cloud. Not just, it broke the cloud. Oh, this was a beautiful trade. This would have been a really beautiful trade actually. This last price was ranging here. What I'm doing now is back testing to see how well Ichimoku works. Okay, Ichimoku works like fairly well. It doesn't work all the time, but it does work. Sometimes you can see that there was a fake out here, a fake out here, a fake out here, a fake out here. A fake out means that it broke the cloud and didn't do what it's supposed to be doing, right? So would you wait for it to bounce off the support to give more confidence? Yes, I would definitely wait for it to bounce back the support before doing anything else. Okay, if price comes here, I would be, if it comes here, sorry, let me just remove some of this line so it's not so messy. Like I wouldn't be able to think very well if the chart was very messy. Okay, we'll leave the conversion line and baseline because we want to see if this blue line crosses this red. If the blue line crosses the red, stay out because it means that it's an indication that price may be doing a reversal already. Okay, but right now it's still above, so we should be okay for now. My bias, just a very weak bias, not a very strong bias, is that price will come back to this support and then shoot up from here. Okay, why I think that is because this horizontal, this key level where price has bounced off it a few times in the past, okay, is also where it would have lined up nicely with the Ichimoku cloud support. Okay, so Ichimoku works as a support and resistance as well. For price to be bearish, it needs to break this entire cloud. It needs to break this entire cloud before it can continue with the bearish drop. So if it comes here and then it rejects it, I think you should be okay for a buy. How do you know if it's gonna reject? When it comes here, you need to look for rejection candles or reversal candles. Okay, so if you don't know rejection candlestick patterns, okay, you will see it's usually very long wick. It's a hammer, it's a shooting star, it's a spinning top. Okay, when you come here and you see rejection, you see a lot of wicks. Like this is a candle, right? You see very long wicks. That's usually price tried rejecting or not able to break the support. Okay, so wait for price to come here and then you can enter for a buy if you see a rejection or a reversal candle. Okay, you can enter for a buy and probably play it back to minimally play it back to the swing high. Okay, I mean, if you want to play back even further, you probably can, because if the new trend has started, it's probably going to keep going up, right? But minimally, you can play back to the swing high. For the day traders here who wants to get in and out quick, you can probably play it to the swing high, which is actually a good amount of pips, to be honest. It is a good amount of, it's a good amount. I will put my stop loss just slightly below here, so that if I'm wrong, means that price would have already kind of broke. If you want to be very conservative and safe, you can put it right below the cloud. Okay, that means if you get it wrong, you are definitely wrong. You are definitely wrong because price would have broken the cloud to be able to reach your stop loss. Okay, I mean, if you want some breathing space, you can do that, because there are a lot of times price tend to wick you out. It goes to your stop loss, kicks you out of the market, and then you end up being correct and it goes to the direction that you want it to go. And that's just a horrible feeling. So if you want some more breathing space, you can move your stop loss slightly lower. Let me see if I can try to look for more things that are backing up my bias that there's going to be a short-term buy here, a very short buy here. Okay, RSI not saying much. On the RSI, it is on an overall uptrend, so that's a good sign. Stochastics might be saying something. Not really. Okay, not really. Let me just backtest to see how well stochastics works. Stochastics doesn't work very well on this pair, to be honest. And if it doesn't work well on the pair, you shouldn't be using it. It works okay, but it's not the best. Yeah, it's not the best, honestly. I wouldn't use stochastics. It's not the best. But yeah, this is just my biasness right now. It's a very weak bias. Let's hope it plays out though. Not a weak bias, like I'm okay with it. Only if it comes and tests this area. Okay, why I'm not gonna enter now? Oh, look at it. Look at it. It's shooting up. That's for sure. Okay, why I don't want to enter here? Because if you enter here, your take profit is right here. You're just playing like a few pips, and is that even really worth the trade? Is that even really worth the trade? You want to get your entry as close as possible to this area, okay, after getting the rejection signal. Okay, yep. So that's all I have for you guys today. Sorry, I haven't been reading the chat. Okay, I started on the monthly, I drew channel and key levels, then the fib on the last even moved to the downside. And price seems to be at the 38% fib. Kaylee, I'm assuming you're talking about, let me see what pair you were requesting earlier on. You were talking about GBP JPY. Is that the pair you were referring to? Okay, okay, let me draw a channel, key levels, then fib on the last signal. Okay, let me just look at it as well. I do want to look at it as well. I like going through charts. I find joy going through charts. Oh, okay. Drew a channel, key level, then fib level. Your channel is a descending channel, right? I mean, I don't see any other. I hope it's a descending channel. Let me see if I can find the exact channel you're talking about. Nice. Oh, yikes.